Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, the market's looking a little bit iffy at the moment. Before we get to that, I know the first thing that you want to talk about this evening is Capitec, which is one of the recent long positions that you entered into for the portfolio. How's it working out in the context of a market that is looking a little bit softer?
Yeah, it's actually working out quite well for us. We did this trade for the portfolio last week, and if we quickly go back and revisit why we did it, the chart of Capitec's up on the screen at the moment. And what happened about two or 3 weeks ago was we had a placement of 5 billion rands worth of the PIC stock that they were looking to exit. So this was exited through an accelerated book build process. And what always happens with these sort of things, with these book build exercises, is that the stock is, well, they will go to a bunch of investment banks, and they'll say, right, we've got this big line of stock, in this case 5 billion rands worth. I mean, that's a very big number. You can't just put that through the market, through the ordinary market. It'll take far too long, and it'll depress the price for far too long. So what they do is they go to these investment banks and say, we've got this line of stock, we'd like to sell it. Please go out and find all your big pension fund and hedge fund clients and whatnot that are willing to take the stock. But because it's a large line of stock, it always gets placed at a slight discount to the prevailing market price. So in this case, Capitec was trading at about 540 Rand when this was announced, and in the end, the placement took place at 505 Rand. So that's quite a healthy discount to what the prevailing market price was. But of course, nothing's changed in the business. It's still the same business, it's still the same earnings and whatever. It was valued at 540 Rand yesterday. Why is it suddenly worth 505 today?
Sure.
It's purely because there's a short-term oversupply of shares in the market, that's all. And typically what you find is that these things do correct themselves and the price moves back up to where it was before the book build took place. Now, that's exactly what we were kind of looking for here. We bought into the stock at an average price of 514 Rand and 30 cents. We bought 470 CFDs for our portfolio. The stop loss is 507 Rand 50, which effectively is below the lowest price that we saw during that recent selling pressure. And the target, I'm looking for 580 Rand here, which is quite ambitious, but I still think it's a possibility. 580 Rand is the prior high that we saw in April, before this recent consolidation. Now, what's happening right now is we've got this area of resistance at 548 Rand. And you can see it illustrated there with that lateral resistance line. To me, what looks like is happening here is potentially the formation of an inverted head and shoulders pattern. So we need to break up above 548 Rand in order to open further upside. And then I think if we get that, then there's a fairly good chance we will go back to that 580 level. So that's what I'm looking for at this stage. I'm staying long. I'm not going to change anything with the position at this stage.
Because you are in the money, after all.
Yeah, we're nicely in the money on it. And I'm comfortable with it. So I think I'm going to give it some more time to play itself out. And let's see whether this little inverted head and shoulders pattern actually can work to the upside.
Okay, which would be interesting and also very gratifying in the context of a market that looks a little bit soggier at the moment. And I know you want to bring up a chart of the top 40 because things are looking, yeah, iffy, and today especially has been quite tough.
Yeah, that's right. So today's been a fairly weak day on our market. But what's very interesting is to actually just look at the dynamics on the top 40 future, specifically here. Understand this. This chart is an hourly graph of the top 40 future, so every candlestick pattern there represents 1 hour worth of trade. And we go back to the 5th of May here, so effectively, pretty much most of the month of May is illustrated here. And what you can see there is that for 11 days, and now today it's into the 12th day, we've actually had sideways choppy trade with no particular trend. But what's very evident is that there's this 48,000 level has been very strong support, and you can see how many times that level has been tested on pullbacks over the last 11 days. The thing is that when you get a situation like this, where you've got a market that rallies, but it makes a lower high each time it rallies, look at that. I mean, in the last couple of days, you can see clear pattern of lower highs. So every time it bounces up off 48,000, but it comes back down, bounces, comes back down to 48,000. What that pattern of lower highs is telling you is that the sellers are actually stronger than the buyers, because each time the buyers try and push the market up, they're not powerful enough to push it to go and make new highs or higher highs. Rather, the sellers come in and push it lower. And inevitably, when you see a situation like that, it usually does break to the downside. What's also very interesting to note here is that we've got this big gap which I think was from, I think it's the 7th of May, if I'm not wrong. And that gap had yet to be filled. And that was created, I think, after the UK elections. And we came back the next morning and everybody was excited about the UK elections, and all our big dual-listed stocks were up.
Yeah.
Now, that gap hadn't been filled, and typically these gaps do get filled. Now, what's happened today is that we've actually seen the market breaking down below this 48,000 support level. And it's gone down. It has actually filled that gap this morning. But if you take all of this sideways mess over the last 11 days and you actually project that down, it should really take us back to the prior low that we saw in the beginning of May. So we're looking at a potential move down to about 47,300 here as a first move, and I'm not saying that'll be the end, but that's where I think we can go in the near term.
Yeah, maybe the selling in May is going to happen in the last 5 days or so.
Maybe it will, yeah.
Okay, guys, now, given that you're hedged on all sorts of fronts as a result of, you have 3 option structures, actually, that you'd constructed for the portfolio, is this a good thing for us, actually?
Yeah, it is a good thing. Now, yeah, we've got 2 option structures, and then we went long of some top 40 CFDs against it. So it's very complicated, and the payoff profile of our the whole structure now, as it is what you see on the screen there at the moment. So along the bottom axis, we've got the levels of the top 40 index, and then on the left, we've got the profit above the line and loss below the line. And this whole thing is the payoff profile of our options, our 2 option structures, which expire on the June closeout on the 18th of June. And then overlaid with that, we've got some long top 40 CFDs, which we did IG markets. Right, so that's how the payoff profile looks. Where are we right now? Well, we're approximately there at 47,700. So we've got a mark-to-market profit of about 7,300 Rand with this thing as it stands at the moment. What you can see is that if the market does continue to fall further, well, then we actually stand to make even more money. If it was to fall a lot, if it was to fall another 3,000 points from here, then we would make our maximum profit, which would be a 35,000 Rand profit. I'm not really sure we're going to see a weakness to that sort of extent, but you never know. But the nice thing is that the way this thing has now been structured, it actually works for us irrespective of where the market goes. We will make some money on it.
However, it's also going to be, it depends on the June futures closeout. So if it's not anywhere sort of significant at that date, then are you kind of left hanging?
Well, this is the payoff profile as it would look on the June futures closeout.
Okay.
So really and truly, I suppose our worst case scenario is it closes at 49,000, then we would end up only making 2,100 Rand on the structure. But if it moves anywhere to the left or right of that, then we're looking relatively good.
Okay, all right, so in the money there. Garth, interestingly enough, in the context of a market that is looking a bit shaky, you've gone long this week, and the latest trade is Mediclinic. So tell us why. Yeah,
I'm going long. And what's interesting, yes, May has been a very choppy month, but there's been what I kind of call special situations. And there have been quite a lot of them this month, where we've seen stocks that have been hit unnecessarily hard for a variety of reasons, like the Capitec that we saw there recently. And you know, regular viewers will know that I like to do a strategy that I call the 3-day rule. And this is where a stock comes out with some news which is maybe negative, but it's shock news to the market. And you typically have a 3-day reaction. Day 1, you get fairly heavy selling. Day 2, you also invariably get fairly heavy selling. And day 3, you usually get some stability coming in. And all of this selling is combined with a big volume spike. And we've seen a number of those situations on our market this month during May. So if you'd actually been patient for those special situations that I referred to during May, you actually could have had quite a good month. And we've done fairly nicely because of it. We've been relatively patient looking for these types of opportunities. And I see Mediclinic being one of these opportunities again now. So the chart of Mediclinic is up on the screen. What happened last week was the company came out with results which missed the market's estimates. Now, obviously, that's a somewhat negative thing, but markets do tend to overreact when things like this happen, and that's where you get your 3-day rule. So whilst I'm never a fan of trying to pick bottoms or catching falling knives or catching falling pianos, or all these lovely sayings, I'm not a fan of doing that, but the reality is there is a way to do it if you do it carefully and you know what you're doing. And applying this 3-day rule often works quite well in that respect. So let's quickly unpack the analysis a bit more on Mediclinic and have a look at why I've done this trade. Now, first of all, you can see that there's an uptrend which goes back to the beginning of 2014 over there. That uptrend support comes in at about 108 Rand. Now, we've seen the stock fall very hard into that support level over the last couple of days since the results have been released. It did take 3 days. There was 2 days of heavy selling and a 3rd day of stability, and today being Tuesday actually is the 4th day. Also, what's interesting to note is the volume spike over there. All right, and I'm going to talk more to the volume spike situation now, but I want to also have a look at an hourly graph of Mediclinic. So this is a screenshot effectively taken off of my IG Markets CFD trading platform, and you can see the weakness that we saw over there. That was Thursday's trade, that was Friday's trade, then we had a bounce on Monday. Now, there you have that volume spike again. In fact, you can see elevated volume throughout Thursday and Friday's trade, and then you get this reversal come Monday morning. Now, the interesting thing about the volume spike is that it indicates a massive transfer of ownership of shares between buyers and sellers. So, and typically these buyers and sellers are diametrically opposed in terms of their emotional makeup. The sellers are panicking, they're capitulating, they think the share price is going to naught, maybe not naught, but they think it's going a hell of a lot lower. And they sell, and they typically sell in a relatively panicky fashion, and you can see that it is relatively panicky because the volume becomes higher and higher the lower the price goes.
Yeah.
So that indicates that there's more aggressive selling the lower the price goes. But the volume wouldn't mark up so high like that unless there were also buyers. And the fact that there are buyers on the other side, well, what are the buyers thinking? The buyers think there's a bargain, it's oversold, there's an opportunity here. So you get these opposing sides. Now, typically, the sellers won't sell forever. Eventually, they'll either run out of stock to sell or simply get so low that it get to a point where they've sold enough or they won't be willing to sell at a lower price. And that's often when you get a vacuum of selling pressure. And that often does happen on the third day, as we saw here. And once you get that vacuum of selling pressure, once the seller's dried up, then if you need to buy that stock, you need to pay up to get it at a higher price. And that's where your oversold bounce typically comes from. So I love these type of trade setups. It's a great way to take advantage of an overreaction in the market. And usually with these types of setups, you will get a 5 to 10% bounce very quickly, within a week, maybe two, after this dust has settled.
So this is, I mean, and this is definitely not what you would call a longer-term trade. This is to take advantage of violent swings on a very short-term basis.
Yeah, it is. Look, I like Mediclinic as a stock to hold in a long-term portfolio. I think it's a great business. But for the purposes of this show and this trade, it's a short-term trade. We're looking for a quick bounce back. I'm looking for a move back to about 116 Rand.
Okay.
So I've gone long at 109 Rand 40 with a stop loss at 107, and my target's 116 Rand for this trade.
Okay. In greater detail, Garth, you always take us through the mechanics.
Yeah, so let's go. We bought at 109 Rand 40. Stop loss is at 107 Rand. My risk per share, therefore, is 2 Rand 40. I'm risking only 1% of our capital on this trade, so that's 3,380 Rand. And the reason for that is because it gives me a bit more flexibility. You know, I don't use hard stops. I don't use automatic stop losses. I use manual stop losses. I can be a little bit flexible around that. And even if we go below our 107 Rand stop loss, I still won't lose our maximum of 2% capital that I never like to lose more than that. So this is conservative because I want that flexibility.
Okay.
If we, to calculate our position size, we take our capital risk of 3,380 Rand, we divide it by the risk per share of 2 Rand 40, and that gives us 1,408 shares. So I've rounded it down to 1,400 CFDs. My target's 116 Rand, which means our risk to reward ratio here is 1 to 2.75, and our exposure is 153 Rand, 153,000 Rand rather.
Okay, a little bit bigger.
Yeah, a little bigger, yeah.
Right, guys, so that's the latest trade. It'll be interesting to see how it pans out. But for the year, you're at a new high,
Yes.
so let's reveal where you are.
Yes, well, Capitec obviously has worked well for us this week, and then, of course, our option structure now moving into the money nicely for us as well. So we're up 35% for the year to date. So it's really been a great couple of months for us. And you can see those are all the open trades that we have on the portfolio as things stand right now.
Fantastic performance. Got very quickly to end off with upcoming courses.
Yeah, I'm running 2 courses in Joburg on the 4th of June and the 6th of June, understanding CFDs and a high probability trading course respectively. Anybody that would like to attend one of these, please email me, garth@traderscorner.co.za, and I'll send you all the details.
Great. We leave it there. Garth, thanks as always for joining us on the show. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.